Hey, fools. I'm Sami Theo, and today's conversation is one I've been looking forward to because it's not just about markets, it's about what markets do to people. My guest is Tom Harden, author of the forthcoming book, Wired on Wall Street. Tom spent years inside high pressure finance in a culture that shaped modern deal making and trading, and he lived through moments that tested not just his investing instincts, but his character, his relationships, and his sense of self. So, and just to set the table for everyone, we'll talk about the human side of finance. So, the intensity, the ambition, the blind spots, and we'll also pull out practical takeaways for our foolish long term investors and for anyone navigating career pressure, family stress, or big life transitions, something that Tom faced all of throughout his career and journey here. So, Tom, thanks for being here.
It's a pleasure to be here, Sammy. Thank you for having me.
Yeah, so I wanted to start a little differently. When people hear Wall Street, they picture power, money, and confidence. But your book shows kind of a more human story. You know, pressure, fear, temptation, identity. So if I asked the people closest to you, what did Wall Street do to Tom Harden? What would they say?
Yeah, it really it made me focus on what other people were doing in my industry to get ahead at that time, and made me really feel insecure about not being part of that illicit in group at that time, which we'll talk about. So I didn't really have a sense of who I was before I started my career, really no self-awareness in my 20s of the pressures and the temptations and the rationalizations we're going to talk about that I could become, susceptible to.
Yeah, it's your story resonated with me because I grew up in Texas and I found a job on Wall Street. You know, when you're growing up in another state outside of New York and you're in finance or business, your dream is to hit the Big Apple and make it big. And so your story starts in Georgia where you grew
Yeah.
up, and so you had kind of similar career ambitions. So tell us a little bit about that early time in your life where you worked really hard to get into Wharton, and then moved your way up from there to Wall Street.
Yeah, thank you. So I grew up in the Atlanta suburbs. So dating myself, 1980s, 1990s. Father was a Coca-Cola man his whole career there back when we stayed 40 years at one company. Mother ran a childcare business in our home. So not a college graduate, but just very hardworking parents. And I could see as the oldest of three brothers, it was up to me to kind of set the tone for the younger brothers and just, do as well as I could in school and in sports just to really honor them. That was a big part of our house. I would say I was a good student, went to a big public high school in Metro Atlanta. Wasn't really into the arts or writing or kind of narrowed it down. Didn't like science and I like math, so I figured business. And at the time, back in the 90s, again, we just applied to three colleges, your middle, your reach, your safety. It's not like my younger people today applying to 20 schools. So I applied to the Wharton School at UPenn as my reach school. So, I mean, I didn't think I had a chance because I was number 55 in a class of 562. So I wasn't even close to valedictorian, salutatorian. My guidance counselor basically told me, as I wrote in the book, you really have no chance, or I think it's only an MBA school. And my dad and I went to the public library and said, no, there's actually an undergraduate program. I applied early. I got deferred, which at the time gave me a 5% chance getting in.
Mm-hmm.
And then that just lit a fire. They were telling me no. My guidance counselor said no. I said, I'm not going to take this. And I just went on a one-man email spree spring of 1995. Back when email started, I had a Prodigy account. I didn't know how to use it. My brother kept, hanging up. I said, my brother, hang up the phone. I have to send an email. What are you doing? And so I would email admissions every weekend, some random test score. Every Monday morning, they would reply, thank you. And then eventually they let me off the wait list. I think I just pestered them and they needed somebody from Georgia at the time. And so I started, this kid from Georgia in this Ivy League school where you're surrounded by these valedictorians, children of ambassadors. It was pretty amazing. People from all over the world. I'm not in Georgia anymore,
Yeah.
but I really set the tone for myself. Like this is a new level. I have to figure out how to study for exams. I have to figure out what I want to do. But I love that competitive environment at that time. Kind of iron sharpens iron when you're at
Yeah.
that type of school. And I also felt like an outsider. I wrote in the book, I was always sort of playing up, I'm from Georgia. I'm not one of these prep school people, and kind of kept myself, as not one of the other people here. And I kind of liked that because it gave me an underdog mentality of, having to work harder, study harder, that type of thing.
Yeah, yeah, it's so one thing we talk a lot about here at the Fool, especially when it comes to investing, is relationship with money and the mindset around money, because that plays a huge part in how we invest, how we save, how we plan for our personal finances. How was your relationship with money, and how was like your family's relationship with money? How did that impact kind of your ambitions and your dreams, and what we're going to talk about in the future with how your career shaped up?
Yeah, my family relationship with money, we were, I would say, middle of the middle class. My dad bought the house for $45,000 back, no, not back in the late 70s, but just like a regular middle class family. Always had to watch money, had to be careful with vacations, had to be careful with traveling to soccer tournaments. And so that kind of imparted on me just sort of save, be a good saver. Um, and when I got to college in Penn, I just started meeting other kids whose fathers were investment bankers or in the hedge fund world. And I thought, oh, I want that too. And I started reading those list of the biggest earners every year on Wall Street. And you'd see the names at the time: George Soros, Stanley Druckenmiller, Julian Robertson. And they were all hedge fund managers. And I thought, oh, I'd like to have that too. And so, I mean, I don't think it was much like the money, it was like the status that these people had. And so
Yeah.
I was sort of driven to that status. Obviously, the money would follow. And so I quickly realized to get to sort of the hedge fund world, I had to start in investment banking. So anybody listening that's an investment banking analyst now or has been in your career, you know what that is. 100-hour work weeks, you're just grinding finance boot camp. And I started doing that at a graduation at DLJ, which younger listeners will have no idea what that is. So that was
Yeah.
Donaldson, Lufkin, and Jenrette in Los Angeles, working with Ken Moelis, who now, of course, is Moelis and Company. That was just, man, 100-hour weeks, nap under your desk. You're at the desk till 5 p.m. and the managing director says, have this on my desk in the morning. You're grinding. And then a friend called from a hedge fund in Greenwich, Connecticut. So now we're going back to the top of the tech stock bubble back over 20 years ago and said, why don't you come work at this hedge fund? My boss is looking to hire people, and she thought highly of me.
Yeah. So you were in Wharton, and even when you're in Wharton, you think Wharton, great school, great reputation, easy to get to Wall Street, but it wasn't necessarily easy for you to get even to a job on Wall Street. It took a lot of effort and grit to get even just that.
Yeah, no, it did. And I forgot to mention, I was also on an ROTC scholarship. So I actually had a military commitment that I signed up for. And I think because it was the late 90s before 9/11, obviously, once I got the offer at DLJ, I was able to pay that back as a loan. But I kind of look back at it as a young man at that time. What if I went the military path versus the Wall Street path? Maybe my life would have turned out different. But yeah, I was not a great student when I started at Penn. I got my first C ever in my life. I called home. I felt like a failure, and my dad was good. He said, "Just graduate. You're already there. That was the hardest part. Just
Yeah.
something's going to happen." So, the big banks, I won't name them, but some of the bigger banks you'll think of turned me down. They didn't want my GPA, and DLJLA just saw me because of the ROTC commitment I had in the summer. I spent flying around in like these little trading aircrafts in the back seat and not throwing up on the plane. And they were like, "Oh, that's amazing. Tell us more about that." And there was a funny story where the guy thought because I was from Georgia that I knew all about guns. He was a gun nut. He's like, "What guns do you like to fire?" And I was just sort of like, "What do you mean? What do you mean?" And so, but they liked me just like the personality that way. And I was lucky that they were able to extend me an offer, and that's how I got into it.
Yeah, that gun story made me laugh too, because coming from Texas myself, there was like that
Yes.
impression, oh, where's your cowboy hat or
Yeah.
where's your accent? Like, no,
Right.
I'm just a normal kid from Texas.
Yeah.
It's
Yeah.
nothing really different. But so
That's
when you
correct.
so when you finally got to that Wall Street job, coming from Georgia, coming from a different whole nother world, what was it like to actually walk in that first day? And you were working at DLJ's LA office in the Fox building, which is the
That's
Nakatomi
right.
Plaza, which is famous for the Die Hard in the Die Hard movie. What did it feel like walking in there as a young guy in a totally different universe? And when was also the moment where you realized this is not a normal job? There's something wholly totally different here.
Yeah, so just walking in, like you said, Nakatomi Plaza. I actually worked there Christmas Eve, but didn't see Bruce Willis running
Yeah,
around. So just that's where
that's good.
we were. We actually had Ronald Reagan's post presidency office there, so I saw the Secret Service sometimes lined up with him when he could still go to his office. But it was just pretty intense. Again, I would say in banking. It was more of a process business, especially as the analyst. Like I'm just processing what the deal teams want. But I liked it was a work hard, play hard. Can you go out at night and come back in the morning and model an LBO? It's just like, can you keep up or not?
Yeah,
But I also wrote, as I was thinking about my own ethical dilemmas, this is kind of where it started, where In 99, we're taking tech companies public, and I'd meet with the deal teams. I'm the lowest person on the totem pole. And I remember the first time the MD saying, "Can you make this adjusted EBITDA look better?" And I'm sure a lot of listeners will know EBITDA, you can take liberties when you're building a financial model. Adjusted EBITDA, my editor had this line, it's basically turning a 200 car pileup into a Disney parade. So I think that's
Yeah.
actually the liberties you can take with that and just make the numbers look good because we're actually serving the client. Gap accounting, that's okay, but we're actually the client. We have to make the numbers look as good as possible. And so I wrote that I didn't speak up. I didn't really think it was wrong because all these other guys were fine with it, but it also left some sand in my teeth, sort of this taste of, okay, this isn't exactly right, but nothing illegal, obviously, but just we're doing something to please the client. But also there's a major gray area that wasn't really taught back in school because ethics class in school, it was all philosophy, not
Yeah.
decision making, not situational.
Yeah, so it's interesting because that environment in the investment banking world, I too worked at Lehman. I wasn't in the investment banking per se, but it was similar in structured finance and kind of similar types of areas. What did you enjoy about that intensity, and what did you feel like was unhealthy that might have been something that maybe planted the seed for what you might have done in the future?
The intensity I enjoyed, but it also was, I guess, the negative too, just how long there was sort of a competition, how many all-nighters can you pull, which today we have this nice discussion about work-life balance, which didn't exist at that time. But just that was sort of a badge of honor. There was one time I was up, I think it was 3 nights in a row right before the end, before I left, and my coworker said, "I think you're crying." And he looked at me and there was tears in my eyes, but I wasn't crying. It was just, but that was sort of a badge of honor at the time. But I also would say I enjoyed just the few months I was there. I felt like I was learning so much. You get years and years of knowledge about finance. I still recommend it to recent grads listening. Like I would still recommend this program because you learn so much and it really sets you up for your next launching point in your career. But the negatives were just the health consequences, just staying up, losing sleep. Now I'm 22. I can handle it back then more than I could today, but still
Yeah.
that was negative, being sloppy with some of the financial modeling. Of course, you can't miss one number or you get reamed out, but I was just so tired. So that was kind of a negative of the situation, but that's to be expected.
Yeah, it's like the residency equivalent to residency for doctors
That's right.
is investment banking, where you're expected to perform at a very high level, even though you're operating on very little sleep.
That's
so
a great analogy.
yeah, so and for investors, having getting that work on the investment banking side, I feel like always enlightens one as an investor later on. So many of our investors, a lot of times what comes up is, this year now we're going to have a bunch of big IPOs. As an investment
Hmm.
bank, you lead those launches of IPOs and you lead the pitches and all the deal presentations, roadshow presentations. So as an analyst working on those deals and seeing the secret sauce or what happens when companies are coming to market, would you recommend investors to invest in an IPO at the onset, or would you tell them to stay away for a little while, or what would your having seen all that?
Yeah, I always recommend just waiting a little bit and see how a company reports their first few quarters just to see what the story is and just tracking it. Like I remember just skipping ahead when I was at a hedge fund. I was there during the Google IPO and I watched it for a year. Like, what is this really like? Looking at listening to the calls and then figure out, my God, this is like the best business in the world. It's just taking a toll on the internet. Like this is pretty amazing. But I studied it for a year. That's the way I would recommend doing it versus buying on the IPO, especially if you can't get the IPO price. I think buying the pop is not. I know, some venture capitalists talk about this now, or maybe we should do it differently rather than having all the value accrue to the private investors. And so there's a much more active secondary market with the big IPOs obviously coming this year that wasn't there maybe 20 years ago, but that's what I would recommend.
Yeah, yeah, 'cause that comes up a lot when we talk with investors about IPOs and what happens there. So now let's move towards like your hedge fund days. You left Wall Street for hedge fund. What drew you to that world? What was your entryway there?
And I think, yeah, this is where, so I'm recruited like my fifth month at the investment bank. I committed for 2 or 3 years and then I left Los Angeles. Santa was in shorts. I flew to Westchester County Airport under a foot of snow and thought, what am I doing? And then I met with this 32-year-old guy. I changed his name in the book, Craig Blaine. Um, he was interviewing me, and he told me kind of nonchalantly he made $75 million that year, and he's 32 years old, so he's 10 years older than me. And it wasn't bragging. He just couldn't believe it. He was up 200% in 1999, and that was his take. And he basically said that I could be him in 10 years. So I made my decision right then. That definitely played a part. Called back to DLJ, met with the HR, and they said, "You're crazy. Tiger's about to shut down," which they were. Julian stopped managing money right around the tech bubble. Hedge funds. I said, "This is great. Like this guy just told me this," and we're now January 2000, 2 months before the top of the tech market, but it all sounded great. And when I got to the hedge fund, it was a little bit different. Banking was more processing, obviously, it's client work, and then the hedge funds, I loved it because you were totally accountable to your picks, and it was sort of like being on an NBA team. Maybe there's like 12 analysts on a team and in a company, and if you pick the right stocks or make your free throws, you're going to be compensated. That's the way it's supposed to work, and if you don't, you'll get fired. I liked it because it was totally flat. Like there's the portfolio manager and then there's everybody underneath them. So it wasn't layers like it was in investment banking.
Mhm.
But it also created incentives to be very short term and focused on just quarters and that type of thing. And so I remember I was told to just, download a sell side model, call a company, and then go through and try to figure out if they're going to beat or miss estimates, which is part of the work. It's certainly not how you analyze a business in full. But at that time, that's how I started.
Yeah. So, many people, many investors will hear hedge fund or Wall Street and think it's all genius, multiple screens. What's kind of the part of the job that people that aren't on the on that side, like, what are they not seeing? What is the thing that you impart to them that they're missing about that job?
Yeah, no, I think it meant a lot of people that weren't necessarily geniuses. It was just people had a lot of people from sports backgrounds, so just a lot of
Hmm.
competitive people that were also smart. And again, there's another level of competition there in that world. But also people I think were just rapidly curious, like a lot of people that like to solve problems and just were really curious about the world and how it works and how one market lines up with the other, or how you could research one company and how it might impact other companies and linking that together. I just loved, you come in, something happened in Asia overnight. What are the downstream impacts to our portfolio? Or something happens in Europe and like having that discussion and really getting to know management teams. I mean, my job was to call companies every quarter, meet with them at conferences, and I could, by the fourth or fifth meeting, they knew me well, and I could ask them the same questions over and over. And then to me, figure out where they might be having problems or not. Again, we'll get to the illegal activity later, but at that
Hmm.
time, this is my job, kind of like reading body language almost.
Yeah.
Is this person lying? Is the person sweating and the quarter's about to end? And you could kind of call back, maybe we should trim our position, maybe we should short. But that was it at the time. It was almost being like a psychologist too, in these research meetings.
So, what was the skill that kind of helped separate people at hedge fund jobs, um, and what helped them survive from burnout? Like, was it, because so much of investing is skill or luck. Sometimes it's a
Yeah.
combination of both. Sometimes it's like after reading your book, I'm like, well, how much of it is actually expert networks and tips and all that, and how does a individual investor even succeed at it? So, what were some of the skills that you learned there?
I think the biggest skill was, you're right. I'd come in and have hundreds of emails in my inbox, which they still do today. You've got brokers calling you with the morning call, which is just what their analysts are saying. So you have all these inputs. The best analyst could synthesize a company down to a few KPIs, so key performance indicators, and
Mhm.
track those KPIs, and kind of like everything else was a little bit of noise, but they were very good. Every company had two or three KPIs that you could track. And you also had to be able to kind of underwrite the 2 or 3 year scenario. What is this company going to earn? What will the free cash flow growth be the next 3 to 5 years? And then, a company, for example, I remember when I looked at Google, now this is back in 2005, they were trading at maybe 25 times Wall Street's estimates 2 years out. But on my model, they were trading at 9 times earnings, and it was going to grow like 80%. And so, that's the kind of modeling you have to be able to do and understand the business really well. But that's what separates, I think, the top people from the people that are kind of average.
So, a lot when you're in the hedge fund world and you're in a seat, you describe, Evan, who had serious Greenwich connections. Barton Biggs, Julian Robinson, Tiger Management, and how that kind of network kind of shapes, destinies. What did you learn about like proximity to power, networks, how to use networks, and the people that you meet to generate ideas, to make winning picks, and what part of the job involved that?
Yeah, and your network can be a positive, and in my case, it can
Hmm.
also be a negative, which I talk about. So my final hedge fund job at 28 years old, I was recruited by Evan, who was my mentor, to be work for him. He was seated by Julian Robertson, again, one of the most famous, great reputation managers, legends of all time that I read about back in high school and college. And all of a sudden, here I am with Evan. Every Tuesday, we'd have a lunch with Julian and the other funds. It was just amazing at 28 years old to go around the table. Now, that is a high pressure situation because you all have to pitch an idea. And I wrote, in the book, my big idea was long Google and then short the yellow pages. Somebody had pitched that before, and then I just scrambled and said we like BlackBerry, but which was really controversial at the time because the iPhone was about to come out.
Yeah,
And I just saw, oh my gosh, all the eyes turned to me and people smiled. It was like, oh no. And so I didn't have my notes. I didn't have my model with me. I got destroyed. But that also is iron sharpen irons. That's the good side of the business.
yeah,
The bad side for me is I also was kind of keeping tabs with people who I suspected. One woman I mentioned in particular who worked for Raj Rajaratnam, who
hmm,
is the most famous person charged in these cases I was involved with. I suspected that she was trading stocks with information she was getting from company insiders because she worked in Silicon Valley, but she lived in Silicon Valley, so she was always at the meetings I couldn't get to, the conferences, the bus tours, and I would just call her to check in. She was always full of rumors, but also she's the one who eventually gave me my first tip. And when I talk to young analysts today, I make this point, like think about the five people you talk to most. Like you're the average of the five people you surround yourself with. I was actually just speaking at a high school randomly yesterday, and I actually said, "Hey kids, at 17 years old, look around, and you are the average of the five people you surround yourself with." Like if
yeah,
anybody told 23-year-old Tom one person's going to end your career in year five, I could have already told you it's probably going to be this lady. I just knew
yeah.
in my gut she's probably pushing that line, and I was the prophecy was true eventually.
Yeah, it's interesting because as I was reading your book, and you seem like a great analyst. Like you did a lot of
Yeah,
work. You had some Google was a pick that had one been holding on to. Now I actually was going to make that my first stock pick ever, and I didn't. And now I feel like, oh man, I really should have bought and
yeah,
hold it. Right? I mean,
yeah,
amazing. And then you had we'll get to this later, but I think you had bought Apple and you owned it for a
yeah,
while. You had to to sell it later on, but just what you were describing in the book, you were a very good analyst. You follow the fundamentals. It's not like you were a day trader or really trying to like a technical analyst. Not that that's bad, but like you're a fundamental analyst that grew up
yeah,
around a lot of like skilled investors. But then I think it was really your insider trading was four trades that amounted to like only 46,000 in gains, illegal gains. I mean, that's not money that's going to make a career or
right,
yacht money or anything like that, right?
right, right, right.
So how is that enough for the FBI to bring you down?
Yeah, and so one critical piece of at my second or at my final place I worked, we lost money in the first quarter, which is, again, it
Mhm.
shouldn't have mattered. I was modeling what is free cash flow 3 years out.
Yeah,
But my boss walks into my office and says we have to start looking for shorter term opportunities. We had also been seeing that the 13F filings, so these are hedge fund filings every quarter of their positions. There was always new positions that are competition, and they would be taken over like weeks later. So this clearly these hedge funds had information that was not public. Never felt I was that part of that world. The boss makes our goals from 3 years to monthly. That's a very important point for anybody working at any type of company. If your goals go from 3 years to monthly, you're going to start looking for ways to possibly cut corners. So, very long story short, the woman calls me a few months after that meeting. Hey, Tom, you made me a lot of money over the last few years on some great ideas. Google Yellow Pages. I have something for you, but you can't tell anybody. Now, anybody listening, hopefully that sets off a red flag. Like, okay, what
yeah,
does this mean? But I was so curious. Okay, well, what do you know? And it was a blatant tip. This public company was going to be acquired in a few weeks. Here's the date. Here's the price. Here's the private equity firm. It was almost like the answers to the test just fell into my lap.
yeah,
And the first time I got a phone call this explicit, I didn't trade, but the next day I was talking to a friend outside my firm. I tell him he's down. He works at a prop firm. He loads up. He calls me back, are you in? And at my firm, I could buy a stock as long as it was less than 1% of our portfolio as a starter position. I bought the stock. I totally rationalized it. It feels like everybody's doing it. I'm just buying it small. The deal happens. My boss looks the other way in our morning meeting. I thought, am I going to get fired? He said, don't tell me how you're doing this. Keep me out of it. So that's what's called willful blindness. So any senior
Mhm.
person in a company, like you have to ask questions about short-term performance. You don't assume it's all good. So my boss says nothing. He's my mentor. I'm thinking he's fine with it.
Yeah.
Three more times she called. So four trades. My firm makes 1 million. Me as the junior partner, the price of my career, my professional suicide, not to be too dark, but this is what it was at 29 years old, was $46,000. And people usually think, I thought Tipper X made millions. Like, no, punchline is
Yeah.
$46,000 to your point, is what I threw my career away for. 7 months after the fourth trade, I'm leaving right there at that dry cleaner at 55th and 8th Street, 6:30 in the morning, about to get a cab to work, and I hear my full name behind me. Are you Thomas Covey Harden? And the last time I heard my full name was my mother back in Georgia about to whip
Yeah.
my butt. And it
Yeah.
wasn't mom. I turned around. Was not mom.
Yeah.
Two FBI agents. Anybody seen a TV show like this? Can you come sit down with us? And we sat down at a Wendy's there, which is still there at 55th and 8th. So I can continue. I'll just pause there.
Yeah, no, I mean,
Yeah.
we're definitely going to that story too, but it's like
Yeah.
interesting because when you hear these insider trades and people that get caught for it, there was and you can remind me of the name of the McKinsey partner
Yes.
that was giving
Gupta,
ideas to
Rajat Gupta.
Gupta. Yeah,
Yeah.
I remember
Yeah.
reading that even the personal profits that he made just from those insider tips was very small. I mean, this guy was a partner at McKinsey,
Yeah.
distinguished career. It's like tell me a little bit more about the psychology of the fact that you're not making a ton of money off these trades. Maybe
Yeah.
your firm is, but it's they almost seem minuscule, and it's like the career impact is massive.
It's a great point. The average case to this day, or the median case, if you read an SEC case on their website, is $58,000 the person made. So in terms of your
Yeah.
career and your potential civil liberties, if you go to prison, like it's not worth it. I think a lot of it, like my friend I tipped, I just told myself I was helping him out. Um, I also at the time, as I mentioned in the beginning, like I just felt I wasn't part of this illicit in group. Like these people
Hmm.
are making millions. And then I hate to say it, when I got the tip and traded, and I went to the next tech stock conference, those guys put their arm around me. Now you're part of our world, Tom.
Hmm.
And I think just that feeling of not belonging. But again, to your point, I was already a great analyst. I was already had these, career making positions. If I saw this play out, Google, look at the last 20 years, right? So like, what's the point? But there was just that feeling of not being in that group at that time. With Gupta, there was a great book, The Billionaire's Apprentice, where he just felt, he's worth 100 million. His buddy Raj is worth 1 billion. He'll help his buddy out. Maybe that'll help him. But again, he's on the Gates Foundation. I think he founded IIT. He's just an amazing person. Like, what's the point? And then, unfortunately, in both Raj and Rajat's books, they didn't take ownership. They
Yeah.
said, that's unfortunate.
So, not to get psychoanalytical here, but what was the kind of private insecurity I think within you that we talked a little bit about your childhood, a little bit about getting into Wharton, a little bit about getting into a hedge fund, and all of those kind of led into some of this stuff. Like, what do you think was really eating away at you that just like made you just do four like these trades? Because even while you're describing these trades, there was something in your mind going, all right, don't do this. Don't. It's not like because there's plenty of people
Yes,
probably that say, whatever, I don't care. I'm just gonna do it. But you had that conscious speaking, but you just never
that's right.
listened to it really fully.
That's right.
So what was happening there?
So really, as I, she calls me. I share it with him. I don't trade first, but he loads up. The stock starts going up every day. And then these rationalizations, like this self-talk starts to happen. It seems like everybody's doing it. I'll do it just this one time. The big one is I can still think of myself as a good person. There's this idea called moral licensing, not to get too technical, but
Hmm.
if we do like good things most of our life, like faithful husband, go to church, volunteer, and we do thousands of trades a year, I could justify four trades because the moral scale weights so much in my favor. That's actually a big thing in these cases. Um, I told myself, I have no idea really who she's talking to. She's often full of it. She could just be making this up. But again, when the deal actually happened, the first one, okay, now I know it's not a rumor. And what am I going to do now? I had this sort of like panic attack. And then when my boss said, don't tell me how you're doing it, but this is helping us, I hate to say it, but I had some adrenaline rush. Like
Mm,
now I'm part of this group who's actually getting the information and doing it. And I think just going back in my 20s as being very insecure of like, I'm always an outsider, as I mentioned, just sort of all the way from Georgia to this Ivy League school. I don't belong here to banking. I'm always still Tom from Georgia, like through the book, I don't belong. And now I belong because now I have the information. Now I'm part of the group at that time.
yeah. So going back to the wire, FBI gets you, um, and now what? Talk us to the when the FBI gets you finally. What happened then, and what was going through your mind in that
Yeah.
situation?
So at the Wendy's, we sit down and he's like, look, man, we know about your four trades last year. And I thought, how did they even know about this? They were so
Yeah,
small, but they knew. They said, we know that you were just down in Georgia last weekend visiting your baby nephew for his baptism. And they knew my 6-week-old baby nephew's name.
wow,
My first thought, though, Sammy, was, "Oh my God, my dad's going to kill me." Right? What's he going to
yeah,
say? All he did was work hard. He did that awful commute in Atlanta for 30 or 35 years just so I could be at an Ivy League school. And they don't really know what a hedge fund is. They just know the son is doing so well on Wall Street. My
yeah,
first thought was disappointing my parents,
yeah,
which is a good thing to think about anytime anybody's unclear about what to do. I thought, oh my God, my wife's going to leave. Oh my goodness, I might be going to prison, maybe. But I thought, first about dad to prison. I start confessing everything. Yes, I made those four trades. The FBI, I'm not even sure what they knew. They just started writing everything down and they
yeah,
said, settle down. We're building cases. Are you aware of this happening? I said, of course it's happening. They said, you can probably help us out. They gave me their card. And I said, should I talk to a lawyer first? And the FBI said, we can give you some guidance on that. We'll let you know when you should do that. They're not supposed to say that, but
yeah,
they have their own incentives to build cases. I mean, they had followed me for a while, profiled me. They called me a cab to work and they said, I can't tell anybody. I can only tell my wife. And that was it. I went to work. I violated that completely. I went to confession at St. Patrick's. I just converted to Catholicism for marriage.
yeah.
I had gallows humor, like how many people in line were hedge fund people. So I talked to the priest, and he's like, "Look, it sounds like your penance should be to help the FBI." Now I should have talked to a lawyer, but that was a weird. The priest told me that, so I called the
Yeah,
FBI and said, "I already violated what you said. I talked to a priest." They said that's fine, but I still had to tell my wife.
yeah. And then yeah, so yeah, tell us about telling your wife because this, you think, we have our careers, we're doing the best we can for our families. Usually, that's our why. That's why we're doing most of the things we're doing, and we think we're not thinking at the time the decisions we make can impact anyone else. But they do because we're humans. We're self focused a lot of times. We're thinking, all right, well, if I make money, that's gonna be good for the family. So that's how I
Right.
justify doing what I'm doing. But when you get caught and it's that kind of flips on its head, it impacts everyone else. So talk to us about how that was like when you talked to Sue, your
Oh,
wife, and
yeah.
that.
100%. One of my other rationalizations was it was a victimless crime. I'm just buying the stock for everybody else. But you realize the victims are people in your family. And so I waited till Friday after work. That was a Tuesday morning at the FBI and the Wendy's. Young couple, right there at 55th and Broadway. How was your week? And she was actually working at Lehman Brothers, I forgot to mention. So, that was
Yeah,
about to go under in 2008. I said, let me go first. I have to tell you something before the next Lehman story.
yeah,
Told her everything. I remember accepting responsibility. Like, yes, I made these trades. This was inside information. She said, can you say that again? And I was interviewing her for the book last year, which is pretty surreal to interview your wife for your memoir. And she's like, I thought you were going to say you were cheating on me or you had some like
wow,
terminal cancer because I was acting so weird that week. Like, what could it be? Like, she's not thinking, oh, he must be insider trading. And I tell her, and the way she took it was that I didn't do anything to hurt her, even though I'd argue she did not marry the future tipper X. She married the future hedge fund manager. So she's definitely collateral damage. We
yeah,
had no kids yet. It would have been very easy for her to say, as a spouse, I don't even know who you are. You're insider trading, FBI. I'm getting out of here. Like, I don't know who you are, or kick me out. I hate to think what would have, like, I would have gone to a dark place if I was kicked out. But it wasn't easy, but she was able to handle it in her way, which I've never met anybody I've met people over the years in my position who've gone through a legal situation who are maybe even getting out of prison now. The wife has never stayed with them. So
Yeah.
I'm lucky there, but I still had to go take on my FBI informant duties and start that.
Was she supportive of you doing the FBI informant stuff, or did you kind of decide you'll do it and she kind of didn't focus too much on it?
Yeah, I figured she was on a need to know basis. She was concerned. I met with the FBI and she said, it's not going to be any of our friends. And I mentioned in the book, like it was a weird situation because the guy I tipped and the woman that tipped me had already won a wire on me, like great
Hmm.
friends. And so I said, and there was actually a case back then where somebody had to wear a wire on his best man. I'm like, I'd like to think I
Oh
wouldn't
god, yeah.
cross that line. So I had an open playing field, like Tom, who are the worst actors? And so in the book, I named them Mr. Silicon Valley, Mr. Greenwich. Like these are the people, but these were like 48-year-old hedge fund managers, not my social circle, maybe not
Yeah.
billionaires, but centillionaires. And I'm young Tom, the analyst. I have to get them in conversations and build relationships. The wire that I wore was about an inch or two big and it fit my front dress shirt pocket. And the FBI said, if it falls out, just say, "Oh, that's my extra BlackBerry battery." Like, oh, sure, that's a good
That's
cover
gonna
story. So, yeah. So, for 2 years, I'm running around tech stock conferences. It's 2008. I'd get meetings with these people through the analyst I knew, and my cover story was pretty good. It's 2008. I'm not doing well. I'm probably going to lose my job. I'll be looking for a seat. That was the terminology.
hmm
And then I get to the point. By the way, I had my 4 trades last year. How do you get your information? But if you're a target and you're meeting me for the first time, you'll change the subject. You'll be like, why is this guy what is happening? This guy's asking me about crimes I committed. The FBI would listen to it later and say, Tom, you're doing such a terrible job. Like, let them talk. And I'd say, hey, it's my first time doing this. Like, I've never done this before. The FBI eventually told me, ask the question and say nothing. Get comfortable with the silence. So I would do that. It was so nerve-wracking. I thought, oh my gosh, these people know I'm wearing a wire. And then by the third meeting, usually they had some trust with me and they would say just enough. Here's how I get information, or I have a contact here. The tippers were a lot of public company employees, law firms, that type of people who were tipping on a friend basis or a kickback basis. The FBI would listen to that and they'd say, you're done here, on to the next one. But they never gave me feedback as to what was happening in this larger investigation. And this would go on for 2 years, me doing these covert wire wearing tactics and nobody knowing.
Yeah, yeah, and you have a few different people that you described that you talked about. There's a haunting detail with Mr. Greenwich. He had an uncanny
Yeah.
record around earnings. Perfect calls, consistency that should have been impossible. When you first noticed that pattern, what did your gut say? Like, how did you feel about that?
Yeah, I felt the way I rationalize cooperating, because sometimes people ask me, don't you think you're a rat? And I say, well, I thought these aren't friends. These are who I felt are the worst actors. And now the decisions I should make today are helping the FBI clean up the industry.
Yeah.
And then people are like, "You're a whistleblower." Like, no, I'm not a whistleblower. Whistleblowers do it out of their goodness of their own sort of intention. I'm only doing this because they got me. And so Mr. Greenwich was, I felt, the worst person who I could just think about because he was always perfect, long or short, the same stocks every quarter. I knew through one of his analysts that he had a perfect call, so he must be getting information. He was a tough nut to crack in the book. 15 meetings, always changing the subject. One Sunday, he gives me a call and he says, Tom, we need to have dinner tonight. We need to talk. I called the FBI. They met me at Grand Central in New York, gave me the recording device. I take the train out to Connecticut. He picks me up at the train station and he says, Tom, good to see you. I brought swim trunks for you. We're going swimming at my mother's house. And the Sopranos final season was all that summer. So all these
Yeah.
ideas are going through my head. I said, let's go swimming. Crazy situation. We go to this house. He starts disrobing. He wants to see if it's taped to my chest. I excused myself, went to the restroom, put the wire in my jeans, put these swim trunks on. So the two of us are walking out to this pool. It was so quiet. There was a shovel against the house, a hole in the ground. I thought he was going to kill me. And he was having landscaping done. We got to the pool. He grabs a tennis ball. We're playing this awkward game of catch. And he said, Tom, I have one question for you. You have to be truthful. I was going to give it up. I was so scared. I said, what do you want to know? He said, have you been approached by the SEC? And truthfully, I could say, no, not the SEC. Of course, it was the FBI. He starts making implicating statements. He's like, I just had to make sure you weren't wearing a wire. That guy was actually never charged. And every time I share this story, people are like, can you tell me who it is? I'm like, it's Mr.
Y-
Greenwich.
Yeah, yeah. But
Yeah,
he didn't even think to like maybe check your clothes or check anything like
exactly.
that.
Exactly.
Yeah.
That's right. You would have thought he was onto me. He would have had somebody in the house check my jeans because the wire was there. I was speaking at a hedge fund last year where somebody said, "So to get our information, we go to a swimming pool." I said, "No, that's not the lesson. That's not. That's. I think they were joking, hopefully, but that's not the lesson." But yeah, it
Yeah,
was
I
the
think
scariest moment.
one
Yeah,
of your the gentleman you worked with on the FBI, who was kind of that rough around the edges guy, had told you if they ever act weird, or they would take you somewhere outside of the norm of a meeting, like run. But obviously, when
yeah.
he invited you over, you couldn't just like take off.
I
You
couldn't
had to
take
kind of
off. Right.
follow through and kind of go there.
Yeah, especially in the swimming pool. It's kind of like at the deep end. And I'm not a good swimmer. I was fearing for my life there because this is what's going on. So I couldn't get out of that.
He was either gonna find you or kill you, like, but just through the fact that you might not be able to swim. But so when you're doing these, as you had your career, and you learned about how kind of edge works, and then when
Hmm.
you're on the informant side, where you're trying to seek out and figure out what their edge was. In finance, we think of edge, and if you're traditionally trained in finance, like like I was, and some other investors are, you learn about, there's information edge, there's time arbitrage edge, there's various forms of edge that you can get. Sometimes it's just unique information, unique perspective on a company that gives you an edge. Or without insider or information, it's more of just, you have like good contacts, you get a feel for like the CEO and how they're speaking, the tone and the vibe, and all that stuff. But your edge that you did when you were insider trading, when you've uncovered these people, is different. So what is that
Right.
edge?
Yeah, so that edge, I was at the time, there was a great book called Black Edge a few years ago that came out about one of the people that was never brought down, the one that got away. It was all about him. And so edge was this term. It was a euphemism for having inside information when you're trading a stock. But to your point today, edge, the right kind of edge, behavioral edge, time edge. Warren Buffett even uses the word edge, but
Yeah.
time-based edge that he has, he can hold it forever. That's obviously the right edge. But at the time, the term edge was being used. Do you have edge? What edge do you have? After my first hedge fund shut down, I interviewed another hedge fund, and they said, "What's your edge? What's your edge?" And not what is your behavioral edge? What is your time holding edge? It was like, what is your inside information that you have? And that's how the term, was used at that time. So in a
Yeah.
nefarious way.
Yeah. So while you're informant, this was 2008, correct? And this is when
That's
the
right.
world was just cracking when it came to
Yeah.
the great financial recession. The markets were a disaster. I mean, they were tanking. I remember that time. Every single day, you're just seeing the markets tank and tank and tank, and it was just brutal for hedge funds, brutal for anyone in the markets. You know, you'd said that in a strange way, my double life kept me sane. So, like, what did you mean by that?
Yeah, it was almost in a way, once I got comfortable with the FBI escapades with the wire wearing, it was like a
Hmm.
break from staring at the Bloomberg. Like it was actually, in a weird way, it was almost, it got to a point where it was more stressful to be at the office screaming at Evans, him screaming at me, whose position is this? You always claim the good ones and then you point fingers at the bad positions. And then when I went out and met a target at a Starbucks, it became almost a relief. And hopefully that doesn't come across as psychopathic, but just it was like, this is something that I'm stepping away from the desk from at that time. Now that was a very short window where it felt like that, but it was almost like, okay, let's do something else. Here's my second job, so to speak, pro bono. But also, I was just trying to stay positive. Like maybe these guys are going to hire me to be a professional informant, which is so silly. Or maybe I had seen that movie Catch Me If You Can with Frank
Hmm.
Abagnale. Maybe that's going to be
Yeah.
me. And it turns out Frank made up like 90% of his story, anyways. But that's a different
Oh,
topic. But maybe that'll be me, or maybe they're going to drop the charges. 2 years into it, I mentioned they said talk to a lawyer now, and my lawyer was like, "You've never spoken to an attorney?" I said, "Of course they told me not to." He's like, "Yeah, that's what they say to everyone." And I said, "Hey, it's my first time doing this. I don't. I just took their orders, and here's how it is."
yeah. So how did your how did, talk us through like the end of your kind of informant days and your transition to something new?
Yeah, so into 2009, so 2 years into this informant escapade, I didn't know it was going anywhere. My wife and I just decided to go on with our family plan. So she had our first daughter, Columbus Day, 2009 on a Monday, and then Friday morning we're up with the baby, and the FBI handler calls me and says, "Turn on CNBC at 6 a.m.
Mm-hmm.
20 guys are in handcuffs. Roger Rotman was the big one. And I recognized some of the other people. And then there was only one name who was not released, and they were calling this person Tipper X.
Mm-hmm.
And I called the FBI handler, and I mentioned I was an analyst. I could kind of figure out who Tipper X Tipper X was, and he's like, that's you." And I kind of feared for my safety, like, "Oh my God, are these guys going to come after me?" And they said, "Oh, you're fine." But I just trusted the FBI. And then eventually got to the point where I drew the line at two friends. They said, "No, we want you to wear a wire on two closer friends who I thought were just good men who were starting families." I said, "I'm not going to do this. That's a line I won't cross." And they said, "We're done with you. Your name is coming out tomorrow." I had no time to tell hardly anybody. I told my in-laws. I told my brother who actually worked at an endowment fund, so he was in the industry. That
Yeah.
was an awful conversation. And then January 2010, my name is on the front page of the printed paper in the Wall Street Journal. Tipper X is Tom Harden. And I wrote in the book, my wife went back to work from maternity leave on that Monday. So picture her back Monday showing pictures of the baby to her coworker, such a happy day. Stressful for any mother, to go back that week, very
Yeah.
emotional. Wednesday morning, my name is on the front of the paper. I left my firm. I'm at home with the baby. She comes home and she was so stoic. People that read the book will see I'm not the hero. She walks through the door, takes the baby, and says, "I can't believe you did this to us." Like
Yeah.
that is the lowest I've felt as a man, as a husband, as a father, lower than the swimming pool, lower than the Wendy's, like that. Because I realize there are victims. There are consequences for my actions. It's not a victimless crime.
Yeah. Yeah, I mean, things really after that's the part in your story where you talk about when your Tipper X came out, when your name came out, that made a huge impact. And so, how did you navigate past that after it came out?
It was rough. You kind of figure out who your true friends are. I don't recommend
Mhm.
going through this experience to figure that
Yeah,
out, but you lose, 50 LinkedIn contacts, all these Facebook people, which is fine. I feel like they're not real friends. But I remember those four texts, the people that sent me those four texts like 16 years ago, like some of my closest friends now saying, "Oh my God, if you want to get a coffee or a drink, happy to talk to you." But they also became good friends because they didn't try to coddle me. They said, "Hey, you messed up big
yeah,
time. Look at what you did. But what are you going to do now?" That was like starting to like get some accountability with me, not like poor Tom, like, no, no, you actually committed a federal crime, but we still know who you are and you have to fix this. So I needed that sort of tough love from what a true friend would tell you the truth, whether it hurts or not. And that's exactly what those people did. But I was still in a shame spiral. I got quite heavy from my frame I wrote, and then one day went to the doctor. All my blood work was horrible. My wife signed me up for a 5K, and I got really addicted to running. I went from 5Ks to marathons almost
yeah,
immediately to ultra marathons, which are anything more than 26 miles. I got healthy. It helped me focus on just not thinking about the job search, but I also got too addicted to it,
mm,
where anytime Sue came home and said, "How's the job search going?" I went for a run. So I was very difficult to live with during this time. I was not a good husband to her. When I interviewed her last year, it was pretty surreal about, the book is sometime later. I said,
yeah,
"What was it like for you?" And she said, "Thanks for asking," because you never did. And
mm,
she was right.
yeah,
And so it was not easy. I got into running, was running these ultra marathons, and then eventually, um, I also started volunteering at my church. And the one thing that helped me, one thing that doesn't help with anybody going through something is like, don't read this. For me, the self-help books don't work because it makes you think about yourself when
yeah,
actually you just go and serve others. And
yeah,
I go to church, and this guy gives me a clipboard. We're doing this food thing for Haiti. Like, can you run this food, this thing at the church? I didn't walk in. He didn't say, "Are you Tipper X?" Or he doesn't care. It's like, just go help people and start serving people. And that's kind of how the speaking came of service, kind of out of this experience too. But it was a long time of a lot of shame and guilt.
yeah. So I want this to land for our members when it comes to people investing long term, building careers, raising families, kind of dealing with setbacks. So for investors, what are three investor takeaways you wish every long term investor kind of understood? Um, is it better to be a long term investor than a short term investor because you think it makes you a better investor? What are some of the takeaways for investors that are actually in the markets on a day to day basis?
Yeah, no, I think it's better to be, a long term. It's interesting now. So much of the hedge fund assets are at shorter term, what are called multi-manager, platforms, which sort of concerns me a little bit.
Hmm.
So I think it's always better to be longer term. But it also, just because you're longer term, be very aware of your own biases.
Hmm.
Investing, behavioral psychology, a lot of what we talked about doesn't just apply to federal crimes. It applies to biases we all have. Like we all have our potential slippery slopes. And if you feel like you read the book and you're like, that could never be me, that's when you're most susceptible to actually going down your own slippery slope. So I always just say have some healthy paranoia. One major takeaway is the peril of making decisions in isolation about anything from the book.
Mhm.
And if you ever feel like you can only make a decision in isolation, then ask a mentor, ask people, get the help that you need so you're protected, right? And just I think about with any decision, if you make that decision, just ask yourself one question. Are you willing to be held accountable for that decision at the end of the day? And I think that's all it really is.
Yeah. One thing we tell our investors a lot of times too, because stocks are very volatile. And our founder, David Gardner, who runs, who founded like kind of rule breaker investing, which is very high growth investing, can be very volatile. One of the lessons he always teaches is be comfortable with losing. It's like that venture capital mentality of be comfortable with losing
Yes.
because you learn from your losses. And maybe that even, given your story, helps you avoid that feeling of I need to always win. I need to
100%.
always be have my estimates correct. I have to be winning
Yeah.
on this
Yeah.
stock. I need to make money. I need to
Yeah.
beat the market. So that's probably, I mean, maybe from the sounds like when you with your mentors you were winning and so they're okay with it, but if you had been losing maybe they would have been harder on you, maybe they would have been pressed you more, and then you would have gone back to your fundamental roots of
Yeah.
picking stocks.
Yeah. No, I think it's like a quarterback, just next play, right? And that's kind of,
Yeah.
you have to kind of just deal with the losses and you can also learn from that. So just, I've learned so much as I shared a lot of that in the book, just like blowing yourself up and coming back and just owning my decisions. Like I get emails every week from reputation AI managers. We found something bad about you, Tom, for a certain price. We'll take it off. And then I send them my website. I'm like, here's more bad stuff. But what am I going to do? Right. So
Yeah.
just like owning it. But also the hardest part, like if somebody's not even like me, if somebody's made a terrible investing decision once in their life and they're really like self-flagellating, you have to be able to forgive yourself. And
Mhm.
that's still an ongoing, I'm not perfect. It's still an ongoing thing for me. Occasionally I'll have a dark thought come in that I'm not worthy enough and I just know it's a thought. So that's another thing that the hardest part is self-forgiveness.
Yeah. So, for people that are for careers and identity, someone in a high pressure career, finance or not, what's your advice not to lose yourself? And then what boundary do you wish you had set earlier in your career?
I wish I had gotten into marathons back when I was in the investing world. I think it's really important to have something you're passionate about that has nothing to do with investing, and
Yeah.
I think that's just like a nice balance. So even if people are here recruiting or building teams, I would just look for somebody who has a passion that has nothing to do with the markets, and I just think that brings more balance into somebody's life versus just being all in only on the markets.
Even in any careers, like if you're only focused on that career,
Yeah,
it could be consuming. If you do something else outside of that, it might help. If you're a doctor, maybe you invest a little bit. If you're an investor, maybe you run and keep healthy. So for like
yeah.
life trials or really hard stuff, when the world just seems to come apart, what actually helps you? Like when like you had testament to your wife for helping you keep the family together and the marriage together, and how do you what are tools you've learned now to deal
Yeah,
with those
I
things?
wish I wish I had reached out to other people at this time other than having my wife be the brunt of this.
Yeah.
So years later, when I was hired to start speaking and sharing my story as part of sort of the ethics and compliance training, people would run into me and say, "Tom, what happened to you?" I'm like, "We'll sit down and you hear the whole story." But my friends, I said, "Well, why didn't you reach out to me?" And they said they weren't allowed to, right? And so I wish I had just reached out to people and surrounded myself with people who were sort of on my team who were friends. So never go through things alone, and you have to be able to just learn from setbacks, get find what the learnings are, and really I call it today like a windshield mentality, just like not looking back, looking forward, learn from that, and not the hardest part is also the shame and the guilt. Like shame is I'm a terrible person and made a bad decision. Guilt is maybe I'm a regular guy, maybe I'm just Tom from Georgia and then got in a situation where I rationalized what I did, but I'm not a terrible person. The shame, whatever you're going through, like doesn't get you anywhere. So it's really important to lose the shame, and for me, the guilt can be healthy. Now, I talk about this every week for the last 9 years or 10 years. And so some people I know say it can't be healthy, but I have a good perspective with it now.
Yeah.
This something in my past, but it's a learning for anybody, today.
Yeah. So been a pretty heavy conversation with all this stuff. But so,
Yeah.
what are some fun things you do now? Like, what are the things that like you're keeping occupied that really just kind of light you up, light your family up?
What makes me happiest today, I shared in the final chapters, is I wasn't even allowed to coach my older daughter in soccer when she was
Yeah,
5 because I had to check the box. And it was just something, can you just picture all the other dads are running out there? And she's like, what? And so how do you explain to a 5-year-old? And just last year, my youngest, in 7th grade, I disclosed it to the team commissioner of the league. I said I have this felony. He's like, not that like that's it, but he's like, you can coach, it's fine. And just now, just at practice last night, one of the girls who's like the worst player in our team started hitting shots for the first time. Like that made me so happy. It's just like little things. Or
yeah,
now my oldest got her permit and she's actually a really good driver, probably better than me. Just like being in the passenger seat with her and she's driving, and my wife, she doesn't want my wife in the front. She wants me in the front. My wife and my other daughter in the back. Like that's like where I just feel happiest,
yeah.
right now.
That's awesome. Yeah, it is the little things are the little things that kind of give us a lot of joy when we sometimes focus too much on the big things. So
Yeah.
Tom, thank you for being here. Thank you for willing like your honesty and your vulnerability. And the book has so many lessons that I think for younger people, for older people, for anyone in finance or not. So thank you for writing that. And they can, I think it's on shelves in a shelves if it even is on Amazon for a few weeks.
Yeah.
And how can people like learn more about your story? Reach out to you if you're willing.
Yeah, reach out, tipperx.com. I actually
Mhm.
just found out I have the trademark now to Tipperx for the U.S.
Nice.
Patent Office. So I'm the only Tipperx allowed forever for the rest of the next
Your
50
jersey
years.
was
I think so.
retired.
So tipperx.com, keynotes, workshops. I'm going to have courses just about basic decision making, like what we talked about today, pressures, how you deal with it. So that's all coming this year after the book. So the book is February 25th, Wired on Wall Street.
All right. Thank you, Tom. And definitely grab that book, Fool. So thanks for joining us.
Thank you.